Like, I would hate for someone to define me based upon one tweet response on one issue, or six responses on six issues. I think that when we all start to understand each other's principles and philosophies and how we think about these things, I think it lays the framework for us to come to agreement, or at least a constructive, cheerful consensus. So, starting with the basic on Bitcoin, and this is how I view it, right? Everybody has the ability and has the right to view Bitcoin through their own lens, and they have their own view of what is it for, and why are they attracted to it. So I'm not here to tell everybody else, what to think. I'm here just to articulate one view of Bitcoin that I've formed over the course of my life.
Don't forget to subscribe, crypto traders. Let's continue with the interview and the analysis of this one.
So I'd start with this observation. I'd say Bitcoin, it's an asset circulating on a network governed by a protocol based on or rooted in an ideology. And it provides humanity with a rational, scientifically sound economic foundation for the first time. So that's what Bitcoin means to me, right? It is a rational foundation for economics for the human race. And, Bitcoin with a small b is the asset. And we've created a digital asset, and we did it with the protocol. And the asset's no value. It is of no value unless there's a network for it to circulate on. So when I think about the protocol, this is the way I look at it. I think Bitcoin, it has three core protocols that are critical to the entire system working. The first protocol is a monetary protocol. The second protocol is a transaction protocol. And the third protocol is what I'm going to call a power protocol. It's near-term, real-time security. It's not security of the network over 100 years, but it's security over the network over...
Bitcoin holds a unique allure for individuals, each with their distinct perspective on its nature and appeal. At its core, Bitcoin is defined as an asset navigating a network under the governance of three fundamental protocols: monetary, transaction, and power. The monetary protocol establishes a robust economic foundation by capping the total supply of Bitcoins at 21 million. This limitation serves as a rational cornerstone, ensuring scarcity and intrinsic value within the Bitcoin ecosystem. In parallel, the transaction protocol facilitates the seamless circulation of this digital asset throughout the network. Through intricate processes, transactions are executed, validated, and recorded, sustaining the fluidity of Bitcoin's movement within the decentralized system. Complementing these, the power protocol takes center stage, prioritizing near-term, real-time security across the network. This protocol acts as a guardian, fortifying the integrity of transactions and maintaining the overall stability of the Bitcoin ecosystem. Bitcoin is not merely a digital currency. It operates as a dynamic asset tethered to a network governed by intricate protocols. These protocols collectively contribute to its identity, fostering a unique blend of economic stability, transactional efficiency, and network security. Understanding Bitcoin necessitates an appreciation for the harmonious interplay of these protocols, shaping it into a resilient and valuable entity within the ever-evolving landscape of digital finance.
100 days or 100 minutes. It's the here and now. So that's based on power. Who has the power over the network? So when I think about Bitcoin in general, well, there's lots of Bitcoin nodes and Bitcoin applications out there. Anybody can create a version of Bitcoin that runs on an iPhone, an Android phone, it runs on Linux, it runs on a different type of computer, etc. For them to be part of the network, they kind of have to share these three protocols. They're going to differ in lots of other functions, right? There are other aspects of software. For example, compatibility. Is it compatible with this version of Unix? There's usability, right? Does it run on the iOS, and does it support touch or not? There's compliance. The version of a Bitcoin wallet that runs in the United States by a publicly traded company, will have KYC AML restrictions for the state of New York, which will be dictated by New York and by the US. So there's differences in the software that have to do with compliance. There's going to be security differences, and this is cybersecurity. So there'll be lots of Bitcoin nodes, and they will all be different in different countries and different jurisdictions for different platforms. But the thing they all have to share in common is this common monetary protocol, transaction protocol, and power protocol. So the monetary protocol is the asymptotically approaching 21 million, right? There will never be more than 21 million. And there's been a lot of focus upon, the blocks of 50 and then 25 and then 12 and a half and 6.25 and the halvings, etc.
Bitcoin nodes exhibit commonalities and divergences that contribute to the diverse yet interconnected nature of the system. Across various platforms and versions of Bitcoin, a unifying thread exists in the form of shared monetary, transaction, and power protocols. These protocols serve as the guiding principles that orchestrate the seamless functioning of the Bitcoin network. The monetary protocol ensures a finite supply of 21 million Bitcoins, anchoring the digital asset in a realm of scarcity and economic rationale. Simultaneously, the transaction protocol facilitates the smooth flow of Bitcoin within the network, underpinning the decentralized and trustless nature of the system. The power protocol, a guardian of real-time security, acts as a unifying force, fortifying the integrity of transactions across all nodes. Despite these commonalities, distinctions among nodes emerge on several fronts. Compatibility issues may surface, posing challenges for nodes to communicate and synchronize effectively. Variances in usability present another dimension, with nodes offering diverse user experiences that cater to different preferences and needs. Compliance considerations, including Know Your Customer, KYC, and anti-money laundering, AML, regulations, further contribute to the nuanced landscape, shaping nodes' adherence to legal and regulatory frameworks.
But the truth is, I think about this not over the course of 10 years or the last 10 years. I'm not even sure the last 10 or 15 years matter, right? We're approaching the 15-year anniversary, but for the sake of our discussion, let's just say I accept Bitcoin as it is today, through all of its twists and turns, the block size wars, etc. And I look out over the next 100 years as my short time frame, and 1,000 years is a reasonable time frame. So I'm looking at this as is this a rational, scientific, economic framework for the human race for the next many, many centuries, okay? And when you look at it like that, it's very clarifying and it's simplifying. For example, once you look out, 1,000 years, you're like, well, what is the monetary policy? It's 21 million. It's 21 million Bitcoin is the most it's ever going to be, and some of them will be lost. And that's the only thing you really need to understand about that. Someone wants to create a software program or a node that has a different policy than 21 million, they're breaking Bitcoin, right? They've corrupted the monetary protocol. And of course, you can have infinite monetary protocols. You could have 5% inflation a year. You could have 5 million Dogecoin a year. You could have all sorts of things if you wanted. You can create a crypto asset or a digital commodity that has a monetary protocol which is inflationary or inflationary for 100 years and stops, right? All sorts of things. But in this particular case, Bitcoin's monetary protocol has gotten to be very simple. We're around 19.5 million Bitcoin, but we're going to cap out at 21 million. So the truth is, to debate all of the nuances of how you get to 21 million is almost like second or third order at this point. Maybe it was second order for the last 4 years. It's becoming third order. It certainly is less than third order by 2035, when 99% of all the Bitcoin has been issued and you've got 1% to be issued over the next 100 plus years. You realize that 1% is divided by 100 years is pretty de minimis. So the monetary protocol is a hard cap scarcity. The transaction protocol is the 4 megabyte blocks every 10 minutes, which works out to, Max, you're going to get to 7 transactions a second, or 7.5, 4,500 transactions in a block is pretty packed. And so when you work back into it, you think, well, like a slow network is 100 million transactions a year, and a fast full network is 200 million transactions a year. And the bandwidth is scarce, right? And the transaction protocol changed a little bit more over the last 15 years than the monetary protocol. The monetary protocol is pretty much pristine since, Satoshi defined it. The transaction protocol, jerked a little bit or adjusted with SegWit, and Taproot sort of adjusted because they changed the theoretical bandwidth and the theoretical nature of transactions. What kind of transactions will the network process, and how much bandwidth can it process? The third protocol is the power protocol. And in this particular case, it's not electrical power, it's computing power, but what kind of computer power? Digital power. You can define all sorts of power protocols to control a network. For example, democracy is a protocol. One person, one vote. Aristocracy, one rich family, one vote. Violence, one gun, one bullet, one vote. Right? The world's full of power protocols. The deer with the antlers have their power protocol. The power protocol for the Bitcoin network is SHA-256 hashing, right? It could have been any other, right? It could be a proof of stake protocol. It could be all sorts of other interesting power protocols. But the question is, who at the end of the day gets to create the block every 10 minutes? And what kind of power do they have to project in order to create the block? And if I had an algorithm which was a CPU-friendly algorithm, right? It's a non-GPU, a non-ASIC-friendly CPU. Well, then you're allowing any general-purpose computer to participate and generate that computing power.
Looking to the future, Bitcoin is not only seen as a contemporary financial innovation, but as the potential basis for a rational and scientifically grounded economic framework that could stand the test of centuries. This millennial perspective is developed by focusing on 2 critical aspects that define Bitcoin's unique identity. At the core of this visionary perspective is an understanding of Bitcoin's role as a rational and scientific economic paradigm. Rather than viewing it through the lens of immediate market fluctuations, Bitcoin is seen as a resilient construct, capable of maintaining its relevance and functionality across the constantly evolving landscape of centuries. This is a shift in perspective that transcends the temporal constraints of our current financial systems, contemplating Bitcoin's resilience and adaptability on a historical time scale. Also important is Bitcoin's monetary policy, encapsulated in the limited supply of 21 million Bitcoins. This deliberate limitation, similar to the scarcity principles of precious metals, is not a mere operational detail, but a fundamental pillar of Bitcoin's longevity and integrity. The fixed limit is not an arbitrary choice. It is a strategic decision designed to endow Bitcoin with economic stability and rationality.